Hi, I'm Paige Deers. I'm here at the Coronet Global Conference in Atlanta speaking with experts, and I'm with Lauren Picarello of Jones Lang LaSalle. And Lauren, you guys just recently finished a survey looking at the way that financial institutions use real estate and what some of the strategic important areas are that they're going to be focusing on. What are some of the key growth areas you heard from these banks?
So when we surveyed the attendees of the banking forum, we heard a couple of things. First, we heard that in terms of their forecast for growth over the next 5-year window, most predict, actually 6 out of 7 predicted, that the industry will see slow to modest growth, somewhere in the 0 to 2% range. And in terms of their future growth strategies, not surprisingly, we heard that the forecast is largely dependent on geography, with the emerging markets really earmarked for the strongest growth trajectories. We heard that South Asia and North Asia, primarily India and China, really present the strongest, most attractive growth opportunities by the year 2020.
Well, some growth is still good growth, so it's an encouraging perspective. Can you tell us how those growth priorities transition into real estate priorities then?
Sure. So we asked the attendees, what are your top 3 priorities in terms of order of importance? And we heard number 1, far and away, the most important priority for real estate strategies over the next several years is managing total occupancy costs, which, keeping in mind the current economic environment, is not surprising. We also heard that increasing the flexibility of the portfolio and increasing utilization rates really are the 2 and 3 top priorities.
So if they're going to do those things, and when you think about banks, you have to think about how many retail locations they have. There's just a lot of real estate in that portfolio. How are they able to cut costs? What are some of the things they said that they would look at?
We heard that the top tactics that really present the largest cost savings opportunities are number 1, worker mobility programs, number 2, rationalizing the portfolio, and number 3, having the right tools so you can forecast space demand. And I think, being here at Coronet, we've heard a lot about worker mobility programs. We've heard a lot about the new tools to forecast. So it's not surprising that those things really are number 1 on the radar.
Well, thank you so much, Lauren. It's good to get this perspective from your survey and then to hear what's really on the minds here at Coronet Global. Thanks for sharing with us.
Thanks.